Good evening and welcome to today's FSM1 webinar. With Japan in full swing, having touched three-decade highs and reigniting last year's rally since the start of the year, the outlook on Japan equities is highly favorable. What are the factors driving the returns? Therefore, our topic for today is unlocking the hidden values in Japan. Mr. Darius Fu from Nikko Asset Management Asia Limited, on behalf of AHAM Asset Management Berhad, will be sharing the Japan outlook and reasons why investors should stay active in Japan. Darius is the head of intermediary business development, and he is currently managing a team that oversees the Asian region. Before joining Nikko in 2018, Darius worked for Aberdeen Asset Management, Eastspring Investments, Prudential Assurance, and AXA Wealth Management. He graduated with a Bachelor of Business Administration merit degree from the National University of Singapore. Without further ado, let us welcome Mr. Darius Fu. Darius, over to you.
Thanks, Joanne. Thank you for the warm welcome and good evening, everybody. I'm glad to have all of you here with us. So tonight, we are very excited to be able to talk about Japan equities with all of you for a variety of reasons, which I'll touch on during the course of my presentation itself. But in case you are not familiar with us at Nikko Asset Management, allow me to just walk through the agenda first, and that will begin with an introduction of who we are, our company, so on and so forth. Then I'll largely talk about, what's the Japan market outlook is like. And then last but not least, I'll round off with the Affin Hwang World Series Fund so that I can give you a practical way to access into the opportunities, in Japan via your investments. So first up, let me talk a little bit about Nikko Asset Management. So for those that are unfamiliar with us, Nikko, we are one of the largest, if not the largest, asset management company out of Japan. Our current group AUM stands at about $228 billion assets under management. And as you can see on this slide on the right-hand side, if you're seeing my mouse, circle around that, it essentially shows to you that, we're not just a Japanese equity and Japanese fixed income fund manager, but actually we do have quite a diversified range of asset classes that we manage, things like Asian equity, Asian fixed income, global equity, global fixed income. And obviously, we have some of the more thematic funds and all that we also manage. And so this hopefully gives you an idea that, we're not just or one trick pony or, we only can do one thing well, but we've actually got PMs and fund managers that can do a variety of asset classes and investments well. But of course, the nature of us is we are Japanese, right? So that's why I think it puts us in a very, very solid position tonight to be able to come and talk to you about Japanese equities itself. So moving on to the outlook proper, I'm going to spend about the next 40 minutes. Hopefully I can keep it around there talking about outlook, and then I'll cover a little bit about the funds, and then I'll take another 10 minutes for Q&A and all that. But I've also got, since we're on Zoom, right, the Q&A box open right in front of me. So from time to time, if you're seeing me glance left and right, it's really because I'm just keeping an eye out on the Q&A boxes as well as the chat boxes. So if you do have questions, you can start by putting them in those boxes already, and I will be more than happy to take questions along the way, and or if actually I see a question that's very relevant in the upcoming slides and all that, I will be sure to mention it and give you guys a shout out as well. So please feel free to use the Q&A buttons as well as the chat box if you need to, if that's available to you, to post your questions to me. Right, so let's kickstart into Japan. But before I go in and start presenting slides to you and all that, I'm not sure if you have the ability to kind of like raise your hands and all these others, because I do see one person raising up hands. But if I'm not sure if many of you throughout 2023 or 2024 has had the opportunity to actually go to Japan for holidays, right? And I say this because it's very ironic. Many of us as travelers and all that, we have been to Japan, I'm very sure, or if not, we love going to Japan, maybe even multiple times. And when we go to Japan, we definitely all have our so-called favorite ramen place to go, favorite sushi place, favorite sashimi place, those that go there for skiing and all that. I'm also sure you have your favorite part of the mountains, the ski resorts, etc., that you will want to go to, right? So from that consumption perspective, many of us are very very, very familiar with Japan. But if I were to flip the script around and ask you, can you name companies that you would actually invest into Japan, right? I have a feeling that some of us might actually struggle, right? So, typically, again, in a more physical environment, I know we're online and all these others. So again, I'm not sure whether you have the ability to type in the chat, right? But if you do, please participate together with me. But if not, don't worry. My point is, if you start to think about Japan and what can you actually invest into, some of you might start naming a couple of companies, right? I mean, typically when I do this at a live event, people will start naming things like Toyota, Honda, and all these other familiar names. Some might even go down the list of like, if they're gaming fans, they will talk about Sony, they will talk about Nintendo, Capcom, for example, the guys that created Street Fighter. The camera fanatics or photographer fanatic guys will start to talk about Canon, Olympus, for example, Nikon cameras. Those that like fashion and all, you might even start talking about Uniqlo, or even supermarket chains. We have a couple of them that sprouted up over the years. The last 3, 5 years, actually. One popular one is called Don Don Donki. I don't know if they've actually made their way into Malaysia as well, but if they are, you'll be familiar with that name. Or if you come to Singapore, you might have seen them around. My point being is that after you start naming a couple of all these companies, right? You're probably in 10 companies deep, 15 companies deep, and then you start to pause and you're like, yeah, what else is there out of Japan that I could actually invest in? And I'm here to tell you, actually, the Japanese market is very, very deep. There are more than 5,000 over stocks and shares that you can buy and invest in Japan. And well, obviously, not all of them are great companies, as you will see in a short while, but nonetheless, there are definitely enough of solid options for you to consider without, worrying about, are they sustainable, etc., etc. So let me bring you into the outlook right now, and then we'll talk a little bit more about some of all these ideas and all that I wanted to share with you. Right. So going into the outlook, in case you are either too concentrated in 2023, coming into 2024 on just tech, for example, or the Magnificent Seven, or AI and all these others, you would have quietly realized that Japan has been the best performing market throughout 2023 coming into this year. And so this is what this chart on the left-hand side is trying to showcase to you. Is beat out actually even the S&P 500. I mean, although to be very, very fair, clients have pointed out to me, well, if I don't buy S&P 500, I just buy Magnificent Seven, I might have done better than Japan. Possibly, depending what's your entry point, but you get the idea, right? It's beaten out the broad-based index, MSCI World, etc., etc. And of course, some people do wonder that, is the performance from the Japanese asset class, right, very isolated to just a few stocks and shares. For example, I talked about the S&P 500, right? If you actually strip out the Magnificent Seven, the S&P 500 is actually a little bit flat. The rest of the companies are marginally up, but not by a whole bunch, right? So when you see S&P 500 up 20 over percent for 2023, it was really off the back of those seven companies. But on the right-hand side, you can see it's very, very different. When you look at the topics index, right, and you break it down by the different large cap, mid cap, small cap, or value or growth, you can see across the board, all forms of Japanese assets have actually, gone up quite a significant amount. Now, obviously, they come from a very low base, which is where I wanted to come from on my next slide. This is the first time they hit, a high in 34 years, almost back to where they were 34 years ago. Now, again, because I have the privilege of working for a Japanese company, um, for many of us, when we talk about, oh, this is back to the high of 34 years, we just take it as a, yeah, okay, congratulations, Japan, well done, right? Congratulations. But, when I start to speak to some of my colleagues in Japan, they do get very emotional about this. So, I mean, let me rephrase this to you, maybe in a context that you can understand. Let's say you've been working in Malaysia in the finance industry, maybe say in the banks or asset management company. So maybe you work for Affin Hwang or you work for Maybank or somebody, or even, FSM1, right? And in 34 years of your working history or 20 to 30 years of your working history, your country's index has never reached the high that it was 30 over years ago. This is what my Japanese colleagues are trying to tell me. Some of them told me, Darius, in the course of my last 20 years in the financial industry, we have never hit our last high, that was how many X years ago. So for many of them, this really is a milestone achievement, showcasing that Japanese companies are finally back on track, from their heydays, their glory days of the 80s, of the 90s, and along the way, they have had a lot of false starts. So maybe threatening to come back up again, but then inevitably dropping. And hence, probably your next question will be, is this performance right now that we're seeing from Japan something that is very real? Is it sustainable? Half of y'all will also be wondering, Darius, now that, Japan has run up so much, is there still room for Japan to grow, right? So these are things, very, very valid questions. I'm probably shooting myself in the foot by asking myself questions before you guys even ask me in a Q&A, but hopefully I get there and then we can resolve some of all these questions, right? So first things first, is it sustainable? So let's talk a bit from the broad country level, right? And although this is a very complicated chart, I apologize for all the many, many colors. What we're essentially trying to showcase here is that these are all the developed country and their, indexes, so to speak. And what we're really trying to showcase is Japan. And again, I'm circling with the mouse, right? Apologies if you're on the phone or iPad and you can't really see me do that. But over here, there's this yellow color line, and that's Japan. So the one that has inflected the highest, and that's the blue color line, that is UK. So UK is really coming off from a very, very low base, which is why in the last 1 year, their so-called confidence and their positioning has rebounded very, very strongly. But I'm trying to highlight to you here is that Japan is still in a much stronger position versus the rest of the likes of Germany, France, Italy, so on and so forth, right? So it is still the third largest economy in the world. So for many investors, right, I do urge you to, think a little bit about that, because I'm pretty sure, when we get towards the end of this presentation, you will also realize that you have been quite underweight Japan, even though it's the third largest economy in the world, just behind, in case you don't know, just behind the US as well as China. Right. Now, what are some of the reasons, So country is doing well, looks like it's going to continue to do well, understand, but what is really driving it? So the first driver is something that was implemented years and years ago by the late Prime Minister Shinzo Abe, and that was really one of these arrows to drive domestic consumption. Now, again, when you look at the heydays of the 80s and the 90s for Japan, they were doing really well because they were exporting nation, right? Most of us know they built cars, they built machineries, and they were selling it like hotcakes kind. But that was in the 80s and the 90s. Then they went through this doldrum, and Shinzo Abe back then realized that, look, we can't just rely on our very strong export business, because there's going to be cycles when it's going to be weak. So we also need to spur domestic consumption. And in order to spur domestic consumption, you really, at the end of the day, need to do two things. One, which is a bit of an oxymoronic. One, you have to actually help companies to do better, be better, so that they can pay their people more money, right? And I'll come to that again because most of us also know that Japan has been deflationary, right? So I'll approach that topic in a short while. But the first thing first is companies must do well so that they can be paid more. But the second thing is also in order to spur domestic consumption, you actually need to get more tourists in so that other people will start coming to your country and spend more money. So this is what you can basically see from this chart. On the left-hand side, you see a nice pickup, right, since year 2000, 2001, 2002. And this really has been off the back of those two reasons that I've talked about. One, companies indeed are getting better. And two, tourism is also, on the rise over the last few years in Japan. And that has actually helped quite a fair bit on their domestic consumption, right? On the right-hand side, you see this Tenkan survey. What this basically is talking about is, the sentiments of companies in the manufacturing and the non-manufacturing segments, whether or not they are producing more goods and services. So as a company, you will only produce more goods and services if you're optimistic that you can sell and you can, obviously export or ship more out. But if you are negative, right, on your own outlook or your own ability to sell, you will naturally produce less because you don't want to oversupply. And then at the end of the day, have to lay long, right? Sell at a cheap price. So essentially, when you see the survey scores picking up, it also means that inherently companies themselves are getting more and more confident of their ability to do more business, to sell more. So signaling that consumption is really on the rise. Now, this second chart is showcasing to you the two parts, right, of where I was talking about what's driving consumption. So remember, the first thing I was talking about is companies are starting to do well. Well, I'll prove that in a short while towards the end. But again, what is the impact is that wages have actually gone up. And you can see on the left-hand side, right, that's actually where more and more savings. So again, you have to understand that Japan, right, has always been a saving nation. But ironically, right, they don't save in banks necessarily. Because why? If you recall, back then there was this tsunami and then the nuclear reactor thing, right? Tragedy. But if you recall, part of the story then was that a lot of houses, because of the tsunamis, their cupboards and all that was swept out. And then when it swept back to the mainland, people found tons and tons of money, right? Literally cold hard cash sitting inside the cupboards. And why? Because for a period of time, Japan not only was low interest rate or zero interest rate, they were negative interest rate. So what that means is you put, if let's say interest rate is -1, it means you put $100 in the bank. Next year, you're left with 99. The following year, you're left with $98, right? So as a result, most people didn't even want to put monies in the banks. They either kept it at home or yes, they would find alternative ways to invest it and all that. But Japanese people are also very conservative by nature, which also then tells you that a lot of the monies was not invested, but stored at home as savings. And as their wages went up, actually their excess savings has also continued to grow. And you can see even on the right hand side, right? Recently there's this they have this thing called the Shunto spring wage negotiations. That's where a lot of the unions starts to renegotiate for things like train workers, bus workers, right? Their wages for the coming new year. And for the first time, you can see wage negotiations has been, really, really flat. For the first time, in 2022, you actually saw wages jump up by 3% and close to 4%, and that has continued in 2023 as well. Now, again, you might say these are all just statistical points, right? But take it from me anecdotally. I've spoken to colleagues in Tokyo, right? They've actually told me that in the last 8 years, they have no increment, 0%. Right. And kind of like the reason is because Japan has always been deflationary, right? So something that's $100 last year will now cost $99, 98. So there's no real need to raise their wages because even at the stagnant wages, they are supposedly purportedly able to buy more. Now, is that true? I'll talk about it again in a couple of slides down, but you get the idea, right? That Japan people, they have been living on zero increment. Now, I'm not sure about you all, but if I tell people to come and work for us and you're going to get 0% increment for the next 3, 4 years, I do think it's a hard sell. People will probably leave the company. I'm sure even in Malaysia, that will be the case. But yes, that is a norm in Japan for the longest of time, right? So right now, with wages going up, you actually do see that helping consumption and all that. Now, the second reason that consumption is very, very strong, as I mentioned to you, was tourism. So when you look at the tourism number, actually Shinzo Abe was on a mission to bring in 30 million tourists every year. Now, he took over in power around 2011, 2012, and you can see on the left-hand side graph, right? Before 2011, 2012, they averaged anywhere from about 4 to 6 million, 8 million tourists thereabouts. But his goal and target when he took office, right, as prime minister, was to bring in 30 million people. So he wanted to bring 4 times more people than what their highest average was at that point in time. And they actually did achieve it in the year 2018 and 2019, 2 years before COVID. And you can see that steady rise. Of course, COVID, they were shot to pieces just like every other country. But as you can see in 2023, the number has rebounded really, really strongly, all right? 25 over million people going into Japan, which has led me to basically ask that question right at the beginning of this seminar, right? How many of you have been to Japan, right? In Singapore, I used to make a joke again because I will ask the same question in a physical event, and typically 2 to 3 hands will go out of maybe every 5 hands. So I joke like Singapore, we got 5 million people, right? So easily 2 to 3 million people out of that 25 million probably came from Singapore going into Japan, right? Okay, I'm sure we're not that big, but you get the idea. A lot of people that I know personally have been to Japan during that period. And on the right hand side, you can see that the corresponding spending from tourists has also helped quite a fair bit, because of all these inbound tourists and all that. And if you actually compare, right, what has the country done to attract a lot of all these tourists is the fact that now they are a lot more friendly to tourists. What I mean by that is, if you were thinking about in the 80s and the 90s visiting Japan, if you didn't speak Japanese, it was really, really tough for you to get around, to get any service, to buy food and all these others. But today, with, internationalization, probably with the internet and all that, a lot of the Japanese people are now bilingual. I mean, they may not be effectively bilingual, but enough for you to interact with them, to order something, buy something, or even just ask for directions around. So today, Japan has definitely been a lot friendlier. Now, the second other thing that I wanted to talk about is when you look at Japan, right, they have been prepping for all these tourists for a period of time. So, one of the major significant events that happened, that was supposed to happen for Japan in 2020 was the Olympics. Now, with the Olympics, right, in a country like Japan, they're not like, previous host countries like Brazil, for example, where Brazil, they had no infrastructure. So a lot of the billions of dollars, right, went into building new infrastructure. With a country like Japan, a lot of the infrastructure is existing. So when they spend the conversion billions of dollars, getting ready for the games, they were actually spending it getting ready the infrastructure, the railway lines, the roads, helping to upgrade certain facilities, so on and so forth. So they saw that as an opportunity as well, not just to prepare for the games, but to improve all their existing infrastructure so that after the Olympics, right, the country has already still benefited from all these infrastructure upgrades to handle what they want to handle from a tourism kind of a perspective. Now, moving on my next slide, right, breaking down to you another interesting fact. Now, obviously, earlier you saw 25 million people has gone back. Could they go back to the 30 over million? We're fairly confident that the answer is yes. And why so? Because if you look on the right-hand side of this current slide right now, you will realize that green arrow, hopefully you can see it. What I'm trying to showcase with that green arrow is that the one big group of people that is not back in Japan yet is actually the Chinese tourists. So if you recall, while Japan was so-called late to reopen from pandemic, China was even later than them, right? So it is only about second half of last year that the Chinese tourists started to come back out in a little bit of earnest, right? So now you also see that, China tourists are, starting to come back so-called in full force. So it is only a matter of time. Last year, you can see they had Japan, by the way, when I say they, Japan had more Koreans visiting them last year than in 2019. They even had more Taiwanese, more Americans for that matter, visiting Japan last year than in 2019. So we expect that China will eventually come back in full strength and also help propel the spending. As it is already, when you look back at history, 2019, China represented a huge chunk, about 36%, almost 37% of tourism dollars spent within Japan itself. So this is a very, very key consumer group for them. And once they start coming back, it is not whether they will hit 30 million, is how far they will exceed 30, 31, 32 million, and how much money will be spent by the Chinese tourists over in Japan. All right, so that is really, off the back, I wanted to talk about that consumption story, what has been driving them. Now, if you recall, I talked a little bit about companies getting better, and then they've been able to pay their workers more and all that. Now, one interesting statistics that, if you forget all the other statistics tonight, that I hope you remember, is that before Shinzo Abe took over in, say, 2010, 2011, Japan was actually really not a great shape from an investment perspective. At that point in time, only 25% of their companies were profitable enough to pay taxes. All right, I'll say this again because it's quite important. Only 25% of their companies were profitable enough to pay taxes. And those 25 will probably be the names you and I know, the Toyotas, Hondas, Mitsubishi, all those names that I was rattling off at the beginning. They were probably profitable, but a huge long tail of companies were not profitable. Now, fast forward 10, coming 15 years already, the corporate governance landscape has really changed quite a fair bit owing to the late Prime Minister Shinzo Abe. He's really driven companies to engage with shareholders a little bit more, so-called put in independent board of directors, so on and so forth. Now, let me introduce you a term. I'm not sure if you are familiar with it. It's called kiratsu. Now, there's another conversion word in Korean called chaebol. So if there are any ladies online tonight, and you or even guys for that matter, if you watch a lot of Korean drama, you may be very familiar with the word chaebol, right? So chaebol in Kiratsus, they just mean conglomerates. But in the Japan context of the Kiratsu, what is very, very different, right, is that it all started from banks. So let's say we use Mitsubishi Bank as an example. Mitsubishi Bank would then start off Mitsubishi Cars, real estate, industrial, so on and so forth. So a lot of their subsidiaries all started out from a bank. And over time, what happens? They will instill or they will install their own friends, their own family members as presidents, as senior management people. So what you get in the past is this whole landscape of nepotism, right? So nobody was really working for the sake of improving company. So long as everyone got a nice, cushy job, everything was a-okay, all and fine. But obviously, that was done at the detriment of many of the companies. That's why I mentioned earlier on, many of them were not even profitable enough to pay tax. Now, what the government then did was started to strip out and force all these conglomerates to list their shareholdings independently. That's why you ended up with Mitsubishi Bank as a standalone, Mitsubishi Electric, Mitsubishi Cars, industrial, real estate, etc., etc. They had to diversify all their businesses. And when you start doing that, you actually force companies to relook at their operation, hire competent people for the job, and more importantly, right, work on their returns so that company can demonstrate that they are improving their ROE, their ROI, returns on equity, returns on investment, so on and so forth. Now, all that has been done. That's why I mentioned to you now 75% of companies are profitable enough to pay taxes. But the government, as well as the Tokyo Stock Exchange, has not stopped there. They didn't go like, oh, congratulations, all of you have done so well. Let's stay as it is. They've actually implemented new rules to consistently push the boundaries for companies to improve themselves. And one of the key things, is this regulation that I put up here is called the action to implement management that's conscientious of cost of capital and stock prices. Apologies, in English is very, very long. I'm sure if you take that whole bunch and you translate it to Japanese, it just appears as a few very nice words. It's just like Chinese, right? If we take that, convert it to Chinese, it'll just be a couple of words. But it is what it is, right? That's the name of it in English. Now, too long didn't read. Allow me to summarize it for you. Essentially, what they are trying to do is this. They're trying to get companies whose price to book ratio is less than one to work on their ability to produce more value for the company. So if you look on the right hand side, what am I trying to demonstrate to you here? If you look at the two red color lines, one of it says 10%, one of it says 36%. You can actually see that 46% of Japanese companies are actually having price to book ratio of less than one. Now, if you're very familiar with all these price to book and all that, what does this actually mean? Say your price to book ratio is zero point 0.8, less than one, right? So it's zero point 0.8. It essentially means you pay 80 cents for every $1 book value that the company actually has. So you as the investor, you're buying this company at a discount. You pay 80 cents for every $1. So if you liquidate the whole company, you actually already up 20 cents out of the 80 cents, that you paid for it. So the reality is a lot of companies, they were just being very, very prudent. They held on to a lot of cash, they didn't want to pay out dividends, for example, and all that. And so what this regulation is now saying is that, look, if you are in that 46%, you need to do something to cross over to that one, at least more than one. Now, that said, and again, if you're very familiar with all these metrics, we are definitely not saying that we want companies to be three times price to book, four times price to book, right? Because then you're paying $3, $4 for every $1 they're worth. But if you're a well-run company and you're run in the interest of helping me as a shareholder grow my value, anywhere between one to two times price to book is probably a healthy region. So all you want is that 36% of those companies to actually jump over the line to become 1 or 1.1, 1.2, for example. And it's actually very easy. They either need to just pay out more dividends, for example, to reduce their cash amounts that they're holding, or to do management share buybacks. Now, I wanted to share that this number has definitely improved because as I was doing this presentation, maybe say 2 months ago or at the beginning of the year, this combined number, right, of that two red lines was actually 49%. as it is, we updated this number, is now 46%. What it means is companies are definitely jumping over to be on the other side. Now, why is this so important? Well, again, back to the regulations. The regulators basically say, if you don't, then you have to do a lot of disclosures in your annual report, and basically explain why your price to book ratio is less than one. Now, I don't know about Malaysia, but I definitely know in Singapore, if the regulators tell you you need to do more reporting, companies will definitely do something so that they don't have to do so much reporting. Okay. So allow me to go to the next slide. And what you can see is that they basically started enforcing this from the beginning of this year. And in Japan, it is again a very interesting cultural aspect, that this tactic called name and shame actually works. So what happens now is every month, the Tokyo Stock Exchange will publish names of companies whose price to book ratio is less than one, literally naming and shaming you, that telling you you've got to do more to get over the line and to be seen as a company that's better. Now, the whole implication is this: they I mean, sorry if I hope I can use Chinese. They 爱面子 also, they want to save face, right? So, you don't want your company to be listed down there and then you're the chairman of the company or you're the CEO of the company. You definitely want your staff to do something or, work out a solution so that your price to book ratio is on the other side. So for us as investors, this is again very, very promising because number one, if you're holding on to a blue chip company or your portfolio is holding on to blue chip companies and they pay out more cash as dividends, your value goes up because you're getting dividends. If they do share buyback, they definitely cannot do share buyback at the discount or too steep a discount. They have to pay you market value or higher than market value in order to do share buybacks. And that is again an option because they got cash in their hands. So it's a win-win thing. If they're doing share buybacks, generally shares will start to go upwards in direction because of the share buyback. They are offering you a premium to sell out and all. You can see that overall your investments within Japan actually starts to float upwards. So this is again, and you can Google about this name and shame thing. There's been a lot of articles written online. In many, many cultures, it probably wouldn't work, but in Japan, it does work very, very effectively. So we're expecting to see more and more companies. So let me just show you on the last line, as you can see, as of end December, only 49% of companies have responded. Now there's pressure for many of them to actually start reporting, start disclosing, and getting themselves over the line as well. All right. So, on top of this action by companies over the last 10, 12 years to get better, now regulators are pushing them to get better. How are companies actually also doing that? Now, remember earlier on, I talked about them being very kiratsu, right? I mean, they're very home-based or nepotism-based and all that. Now, what you can see on this slide is that they've actually started to engage shareholders more. They've actually started to put in people who are professionals to run the company. So what you can see is that over this period of maybe, let me see, almost 9 to 10 years, right? The number of shareholder and activist funds. So what it means by activist funds and shareholders proposal, right? It means that if I'm a fund manager and I own that stock and share, I basically and I own a lot of the stocks and share, I can actually get access to management and all that. And sometimes I will make certain proposals to management. Hey, have you thought of this? Have you considered this? Have you whatsoever? We're not trying to teach the company how to run itself, but we're trying to give certain ideas that this could be a better way for you to improve your cash flow, improve your cost to equities, for example, or your cost to investment. And by being that kind of an activist fund manager, we're actually just trying to help them to realize there could be blind spots within the way they think or the management of their businesses. So again, it could be a big business that has many unprofitable lines or subsidiaries. We might be telling them, look, you should be cutting, selling, close down, and then consolidate again, and then focus on your core business, for example. So what I'm trying to say is that over time, the number of such proposals and all that, as you can see, have steadily increased. And yet at the same time, right, the percentage concentration of AGMs. So what this means is that back then, when you have a lot of companies, they used to just congregate and then they do very, very minimal AGMs engagements. But now you can see that for many of the companies, the engagement levels is getting a bit more diversified, and it is helpful for the company to get more feedback from the ground from that perspective. All right. So, That's what it means by that concentration. So they used to get feedback from very, very little people. Now they're getting feedback from more and more people. Now, the second thing is that you can see on this left-hand side as well, in the past, from the cultural aspect, right? Whenever Japanese management people, CEOs and all that, for example, put forth certain proposals at the AGM, they used to be all voted in one, right? Because you are the chairman, you are the, the CEO. Okay, I support you. I'll just vote for you. But what you have seen over the years, right, is that the number of things put forth by management that automatically get voted for has decreased over this period of time, right? And we gave you some of those companies and all that. You can see it's examples of that you really capture and see that it is no longer what management says that counts, but they have to be very, very accountable to shareholders and all that. And if they don't like, shareholders don't like your ideas, they will actually vote against you and maybe to a certain extent vote you as a chairman or as a CEO out. So you have to be very, very mindful and cognizant of all of that. All right. So therefore, this is just showing to you that as shareholders, as corporate representation gets more and more active, companies will, be more mindful and they will continue to push the envelope further and continue to do well. All right, so I've start off on talking a little bit about Japan, where they are. I've talked about the companies. I talked about how consumption, corporate governance, and all have helped. Now, for many of you online, the key question will really then be, since the market has run so much already, am I entering now at a late point? Right, that's the first question. Am I entering it when it's too expensive? Am I the retail customer that's the last one holding the bag? So on these two slides, I want to showcase to you is not the case. Now, why? First things first, let's look on the left-hand side. You will see the price to earning and the price to book. Now, if you look at the orange color line, hopefully at least you're seeing orange and not a distorted color, you will see that price to earning, right, is currently 15 times price to earning. Now, 15 times for equity market, right, is what we call fair value. Now, if you look back at the history as well, there's a huge spike in 2020, that's really because COVID related and all these others, right? And Japan was a lot more of an IT industrial country, so they benefited at that point in time, and then they came down a bit. But when you look at history, say in 2012, 2014, 2015, you actually start to notice that the highest the Japanese market has been at that point in time was 18 times price to earning. But where we are today, we're 15 times price to earning. So we're not even as expensive as we were 10 years ago or 8 years ago and all that. But yet, what I'm trying to express to y'all is that the companies are in better state, they have a better run, and they are in better growth shape, right? They are more profitable, etc., than they were 10 years ago. Yet 10 years ago, their price was more expensive. And no wonder they have been caught in that trap where, it's up and down, up and down, up and down. So today, where we are experiencing Japanese companies, right, and ourselves, not namely being one, we do expect that, we will take off on a nice little trajectory because things are better than they are 10 years ago. There is more growth. We're seeing real potential and all that. We do believe that we will, for us to climb back to 18 times price to earning, that's not even, can it happen? It should happen. But obviously, can it climb higher and higher? Then there's another discussion for another day where perhaps it will be more of a, should we start selling, taking profit off Japan, right? But and in the interim right now, from a valuation perspective, I want to assure you that while markets have risen, you are not buying it at an all-time high, so to speak. Now, the second thing that I wanted to highlight to you on the right-hand side, and that's where you see that black color line. Now, that black color line actually represents cumulative purchases. What it means is that investors from overseas buying Japanese equities, long story short. And you see that in the early part of 2013, 2014, right, the ownership was quite high, and then it sharply dropped quite a fair bit until probably about a year or two ago. Now, why did the weightage or the foreign participation in Japanese equities drop by so much? Well, we basically have the US to thank for because, taking a step back, if you think about index benchmarks like MSCI World. Now, during, the 2013, 2014 era, if you go back and look, MSCI World, say the US weightage was probably about 50%, maybe around 52, that kind of number. Japan at that time, though, was anywhere from 10 to 12% of the benchmark. So Japan was still a sizable weight. In fact, at that point in time, if they have not been overtaken by China, they were still the second largest economy in the world. But why this sharp drop? Because obviously, as I mentioned, Japan went through that period of false starts, right? Up, down, up, down. And then if you recall, during this period of time in the last 10 years, that's where US stocks and shares, a lot of the tech companies started to do extremely well. So much so that if you look at MSCI World today, it's almost 60 over percent US. What happened to the Japanese weightage? It has dropped down to actually 6 to 8%. Yeah, 6 to 8%. So what it means is that a lot of funds out there, ETFs, for example, if they are all benchmark related, their US equity weightage is higher to 60% or even higher than 60%. But your Japanese weightage has actually fallen. So this is not just a global equity kind of a phenomenon. When you look at things like multi-assets, same thing. Japan is very, very underrepresented. So today, actually, if you are investor, right, it might be a good idea, especially if you already bought global equity, global multi-assets and all that. Go and pull all your fact sheets and your information together. Look at all your funds. You might be suddenly realizing you've got very, very little exposure to Japan from an overall portfolio basis because you thought to yourself, never mind, I'll leave it to the global equity manager or the global multi-asset guy to allocate to Japan for me, right? I'll tell you right now, they're under. You can see that on this graph on the right-hand side, that black color line. But you started to see a bit of a pickup from January 2023, and then coming into 2024. But once again, we're only a third of where we were at the high point of, say, 2015, 2016. Now, there definitely has been people that started re-looking into Japanese equities. But I'm also very pleased to tell you, it is not the mainstream retail customer yet. All right, it's not. Because if you think about the whole 2023, I can very confidently tell you many of the banks were not calling for Japan market. I mean, out here in Singapore, I interact with a lot of the private banks as well. A lot of the private banks have actually told us, yeah, we kind of missed out on the whole Japan because they had no call for Japan throughout 2023. So who are the people that are actually buying? It's actually institutional money. So the likes of your Temasek GIC out here in Singapore, your EPF, your QUAP in Malaysia, they were the ones slowly increasing their allocation into Japan, realizing that they are massively underweight right now and they want some representation with it. So are you too late? Buying at the tail end right now when everyone came rushing into the market? The answer is no. That's what I'm trying to say to you. From a valuation perspective, from a demand perspective, and a quantity purchase perspective, you're not. You are still early. You're not Cinderella, okay? You're not coming to the ball at 11:30 or 11:59. So rest assured of that. So last but not least, just some key points about looking at Japan, right? Because of what I've said, what will you actually get by increasing Japan in your portfolio weightage and all that? You'll be getting companies that are actually, right now very cash rich, very stable. They are, some of the blue chip companies and all that. They are very, very focused on dividend yield, dividend growth. So as I've mentioned, they want to cross that line on that price to book thing, right? So basically, they will be paying out cash. And if they are strong cash flow companies, one of the ways that they can reduce book value is to also pay out cash rather than do buybacks, right? They pay out cash to shareholders like us, like you, and essentially build value for you. So you're getting companies that will be doing that and have a focus on that. There's also a lot of alpha generating opportunities within Japan. Now, if you look across, and some of you as retail customers, you would have heard this argument before, warranted. Some people always say fund managers don't always outperform the benchmark. I totally agree. So, which is also why you need to pick and choose your fund managers very, very carefully. But in this case, what I'm trying to demonstrate to you, if you look at the left three bars, right, that means those in red or maroon color, those are Japan large cap, Japan mid small cap, Japan and the all Japan equity, right? You will realize that, 15.5 times, 53 times, and 26%, sorry, not times, of Japan funds actually outperform their benchmark, which means being active in Japan actually pays off. There are fund managers, more fund managers in this space that actually help you add value to your portfolio compared to 9.4% of fund managers in US equity. Global equity is worse, is 2.7. International equity is 3.9, right? So if you're buying a lot of all these others, many of their fund managers are actually underperforming as many as more than 90%. But within Japan space, you actually get good fund managers. And hopefully, reputationally, as I introduced us in the beginning, we're the number one, if not number two, largest fund management company out of Japan. You'll be able to trust us that we know Japan well and we're able to beat the benchmark and all that as well. All right. Another interesting observation is that with the generating opportunities, right? It's also because right now very few analysts want to go and cover Japan. So what do I mean by that? I mean, if you are a MIT, Harvard, Oxford graduate and you want a life in business in Wall Street and all these others, you probably want to join a firm that gives you access to US stocks and shares. So every wannabe analyst and all wants to cover Apple, wants to cover Google, wants to cover all the exciting stocks and shares. You ask them, go Japan, cover Toyota, which is to most people very boring, cover Honda, cover, maybe Sony, some will be excited and all these others, but you get the drift, right? You get my idea. Not many people are saying, yeah, I want to go Japan and I want to cover Japanese equities and all that. And because they don't necessarily understand the nuances of Japan companies, they don't understand the history, they don't understand the culture, they oftentimes misinterpret the information and the data, and as a result, are not able to outperform. So therefore, you see less people interested in Japan, which makes Japan a more niche market to be covered actually. Some of all these are breakdowns, but allow me to just jump. So one of the last few things, or rather the first few things that I said that I will address right at the back is this whole idea about deflation as well, right? The early idea about Japan being deflationary, so wages can stay and all these others, right? I want to also help to debunk, to basically show you that is really Japan of the old and not Japan now, and why Japan has turned its corner. Now, over here, on the left-hand side, right, there's this snack. I'm not sure if some of you recognize it from the packaging. It's called Yaukin. So Yaukin is the company, sorry, and they make this snack called I don't know how to pronounce it. I'm going to massacre the name. It's called Umaibo or something like that, right? But the main point is that this snack has not changed its price in 42 years. 42 years, the snack is exactly the same price. Now, if I were to localize it for Singapore, Malaysian context, right? You guys still have hex sweets, I remember, right? I remember when I was younger, you can buy 5 hex sweets for 10 cents. Then it became 4, then it became 3, so on and so forth, right? It's that kind of thing where their snacks have not changed prices for 42 years. Now, to maybe bring it to a more mainstream example, do you know that Coca-Cola in Japan has not increased its price in 20 over years? Coca-Cola is still 100 yen in Japan over the last 20 years. So when I ask my colleagues though, hey, are you truly deflationary? And they go, no lah, obviously we're not deflationary. 20 years ago, when Coke was 100 yen, the can was this size. Today, 100 yen will get you a Coke that's this size, right? All of your tourists come to Japan and you think we like small and cute stuff. No, it's not. That's deflation in effect. Something so big now becomes so small. Last time, 100 yen will get you 100 grams of grapes, for example. Today, 100 yen will get you 90 grams of grapes, 80 grams of grapes. You get the idea, right? Singapore, we all experience that. In Malaysia also, in all the potato chips and snacks. Last time it's full packet, then become three-quarter, half, and all these others. Now got more air inside the bag than potato chips, right? So similarly, this is exactly what we're trying to tell you that, when you look at a lot of the companies, right, they are finally able to increase prices for the first time. And it is a very, very brave decision. This quote at the bottom is a very difficult decision to, make the first price revision since the product released in 1979. The product is 1 year younger than me. I was born in 1978. So it's been a 10 yen product. Finally, they increased by 2 yen to 12 yen. So you can see that things are turning around. Companies that are selling popular products finally are able to do margin maximization, which means they're able to price their products more and more expensive, therefore stretching out their profit margin, therefore becoming more profitable, therefore paying their people more. You see the whole cycle, right? Therefore, increasing domestic consumption goes up, you get share price going up, and then there you go, it's a cycle, which is again why we think that it is going to be a very, very sustainable story for Japan, at least, for the next 3 to 5 years. So, where I wanted to just go through with you in closing, at least for this part, is that, the delayed recovery has obviously put off tourism, but we do think that's going to come back in force. And so that's going to help with the domestic consumption story. Corporate governance is also going to help, improve the quality of companies, thereby earnings, thereby people's wages, therefore feeding back into the whole system again. And as a result, there's going to be a significant amount of value that's going to be unlocked from Japan, we feel. All right. So frankly, this is the outlook for where we are in Japan. I'm going to open it for Q&A in a couple of minutes, but just to round off, right? So in terms of some of the fun information, I'm not going to dwell too much on this. I suspect this could be shared with you after this, or if you Google on FSM1, you should be able to find Afin Huang World Series Japan Growth Fund rather easily. The fund information is here, but more importantly, I wanted to share with you, the performance, right? So performance have actually picked up as well. And as you can see, from inception of 2014, there was a period where, things were getting rough, I mentioned to you. But as you can see right now, performance has been very, very strong year to date, calendar year. We're definitely beating the index. And importantly, again, I'm just going to skip through this because you can find it on the fact sheet and all. But more importantly, when you look at the companies that were invested in, there are some interesting names, stuff that you probably know yourself. But again, Toyota, Mitsubishi, Sony, Sumitomo, all right, nothing that you don't know. But perhaps from a day-to-day basis, right, would you go out there, go and buy the stock yourself? Probably not. So where we're urging is for you to, trust us, trust Afin Huang, that, basically as we basically invest your monies for you, we'll be able to deliver the returns for you on an ongoing basis, right? With that, I need to show you the disclaimer. If not, the Malaysian SC will take my license. I'm going to welcome back the moderators. I see a lot of questions coming in the last 10 seconds. So, Joanne, would you like to read it or should I self-serve?
Okay, thank you, Mr. Darius Fu, for the insightful presentation. Now we'll
Right.
move on to the Q&A session. Okay, the first question, what brings the recent downturn on Nikkei?
Right. So in terms of the recent downturn, right, I think it's not so much of factors that are working against, but as we mentioned, the market has done so well, so naturally there's some hesitation right now, right, where people are worried, okay, we've just gone 30% up, right, do we think that it's going to go up more? So some people are just clearing some money with profit taking, right? But also because there's been pockets of questions surrounding the uncertainty of more global economics, lah, right? So one worrying trend is obviously it looks like Donald Trump may be back to the White House in some shape or form. If you recall, that means that he might pick up his quarrel with China again. Trade wars might be more uncertainty. Currently, with what's going on in the Middle East, that's another pocket of uncertainty. What is going on in Russia, Ukraine after 2 over years, still not even settled. That's yet another cause for uncertainty as well. So we really don't think there's anything wrong. In fact, if any one thing, right, we think that the other very recent news that came out from Japan, again, from an actual impact and significance to all of us, is very little. And that is Japan finally ended its negative interest rate regime. So earlier on, I talked about their interest rate is -1, right? So $100 become 99, become 98 in your bank account. They finally ended that. And they didn't just go to zero. In the past, Japan would just go to zero, which again is like no point, right? Why would I put my money in the bank and get zero? Now they went to a very significant 0.1. Okay, so what this signals to you is that yes, finally, for the first time ever again in a hugely long time, uh, Japanese people can put money in the bank and at least see some interest. It's not going to be great. I mean, you guys in Malaysia have it best. You guys get 3-4% easily, but 0.1 is something that Japanese people have not had in a long while. And that actually is a good signal because it means the country is on the path of recovery. We actually think it's a very, very positive news. Yeah.
Okay,
Sorry, Joanne, I hope that helps.
next.
Yeah.
Yeah,
Mm.
yep. Thank you for answering that question. Next question. What is the risk of an aging Japan population to its long-term growth? They are
Mm.
also not keen on immigration.
Right. So actually, this is a two-pronged answer. One, the aging population is not a new thing to Japan. They've actually been very, very proactive about it 10 years, 20 years ago. And that is seen through all their automation and all their robotics, which is why today they are the leader in automation and robotics, to put it short. So they have definitely tried their best to leverage on technology to improve themselves and all that. But the second part about immigration is true. While they are not widely saying, come everybody, we're taking everyone to become Japanese citizens, but over the years, right, they've definitely been very open to get other people to come in and work. So it is not uncommon right now, right, for example, to see in their factories and all that, a lot of Myanmar workers, Cambodians, Vietnamese, and all that. Now, again, of course, to be very, very fair, if you're walking around the main streets of Tokyo and all these others, you're not going to see a lot of all these other nationality people, right? Because these are all in factories and all that based in the more outskirt parts of Japan. But where you see this transference of technology becoming very important, right, is because even when these guys come to Japan, it's not really a long-term kind of a thing. They get training, and then what happens is they go back to their home country, which very, very likely these Japanese companies would have set up factories there to ensure that the quality and all that is maintained. So let me give you a concrete example. You think about guys like Toyota. In order to combat this whole problem, right? Toyota in the 80s and 90s used to manufacture out of Japan, but today Toyota has more than 40 over factories outside of Japan, right? So they no longer rely on the workforce problem, on Japan to be able to produce cars. They're producing it in Mexico, Malaysia, Singapore. All of our Toyotas come from Thailand. You get the idea. So they are training people and then sending back, in order to maintain quality and all that. So yes, while they are not that keen on immigration, they are slowly opening that portion up. But overall, you do see that they have the ability to combat that aging workforce problem. But interesting fun fact for you, and maybe that's why our lens is a bit tainted. Nikko AM in Tokyo, our office, right, one third of our staff are non-Japanese. So they are Caucasians, they are everything. And in fact, Nikko AM, right, we did something very, very unprecedented. Last year, we actually put in place our first female Caucasian CEO for the whole group. It's never happened before. The last time was female. Nomura Asset Management had that. They had a female Japanese lady. We broke two at the same time. Female and Caucasian lady became group CEO. So that gives you the ideology, and you can see that things are actually changing quite a fair bit. Yeah. Sorry, Joanne. That was it.
Okay. Next question. We have two related questions on
Yep.
national debt.
Yep.
So I'm gonna combine these two questions together.
Yes. Okay.
National debt already tops more than 250% of the GDP. If
Yes.
Japan needs funds for defense spending and social care for aging
Mm.
folks, what options do they have to find more funds to reinvigorate a new Japan?
Yep. So just a follow-up is it a problem for Japan? Well, the answer is no, to be very honest. Okay, before I tackle Japan, just to give you an illustration, national debt sometimes is a very how do I say, it's a very clouded argument. FYI, do you all know that Singapore, we are also negative in terms of our national debt from the perspective that because we are a very small country, right? We actually have to issue bonds, right, for the sake of issuing bonds. Now, of course, Japan now getting into the 正题, right, the Japan part. Japan is very, very different. Why did they have to be in negative GDP? In other words, they are printing more, they're just and issuing bonds. It's really because, right, for the longest of time, their companies are not doing well. So if you recall, 25% of companies used to be able to pay taxes. Now 75%. So what you see is that when companies get better, the ability for the government to tax them and get corporate income tax is higher. And then the double whammy is that when people were not earning enough money, as in zero increment, the tax level becomes the same. But right now, you start to see their wages going up. So it also means that the tax that they are getting from their people, while not exorbitant, is slowly increasing also. Japan is also toying with ideas such as like GST, for example, to also augment, right, their tax incomes and all these other things. So I would say that, overall, they needed the companies to get better. They needed people to earn more money. And right now with tourists and all these others, right, you're getting other streams of taxation as well, whether it's like visa application from certain countries, airport taxes and all these others. They are getting tax, revenue in some of these other ways. Now, the question though is it fast enough? Is it going to be a problem for them? Well, it's not really a problem because how Japan has always handled this issue, right, with the national debt is if I got no money, I control P, or I print. Not unlike the other big brother, the US is also doing that, right? So Japan will do that. And actually, that's the other question which I suspect will come down the road if it's not already popped up, which is the weak yen. So when Japanese government prints money, it's going to weaken the yen. Japan right now, they like a weak yen. All right. I know the question is going to come out like, is Japan doing well only because the yen is weak and all that? And again, I can answer that if there is such a question. But my point being is that why does Japan enjoy a weak yen? While outwardly the government and the Bank of Japan chairman says, no, we want to strengthen the yen, we want to strengthen the yen. Realistically, we don't think that they will strengthen it all that quickly in the next 1 to 2 years because in the past, Japan in the 80s and 90s, they only had to contend with the US. And back then, if you recall, the US used to accuse them of being currency manipulators because the yen was weak, they sell more. Doesn't it sound familiar? The same playbook they put on China now. But in today's environment, it's very, very difficult because Japan no longer just competes with US. They compete with Korea, they compete with Taiwan, and they still compete with China right now. So if they've got more players, more puzzles, more pawns in the game, if you like, for them, they're not going to aggressively strengthen their yen because, yes, to a certain extent, it does help them to sell more. It does help them to basically earn more money, lah, long story short. So is national debt a problem? No, because at the end of the day, they can always print, they can let their yen slide a little bit more, and then just do a little bit enough to strengthen it back, and then repeat the playbook again. Yeah. So I hope that helps answer the question for whoever's querying about that. Yeah.
Okay. Indeed, there were questions on the yen, which I've also highlighted as answered live. And
Yep.
then now we come to the next question, also related to the yen, but this question is asking what will
Mm,
happen if yen strengthens in the future,
mm,
assuming a currency don't weaken forever? Corporate
right.
earnings will dip since they are being reported under yen. Will that
Yep.
stoke a capital flight?
So two things. Yes and no. Okay, so all right. So as a Japanese company, I can attest to this. The most okay, maybe let me take the first part first of my explanation. Um, in the past, there is definitely a certain amount of truth, and I'm talking about the 80s and 90s again. When the yen was weak, they sell more. But remember, that was because they used to produce in Japan, right? So they produce the fridge, the washing machine, the cars, and all that. Weaker yen, they export a little bit more. So does that argument still hold true today? Earlier on, I preluded a bit of the answer. The answer is no. When we speak to guys like for example, Toyota, Honda, and all these others, the long story short is they got so many factories outside of Japan today. And so take the ones in Mexico, take the one in USA, they buy raw materials in US dollar, they pay workers in US dollar, they sell and receive US dollar. So there's no currency, risk over there. Same thing in Singapore and all these others, right? They produce outside of Japan now, but they are a very, very good company, which is why internally within their finance departments, they do a lot of active hedging. And if you want to see a more close example of active hedging, right? All you need to do is think about Uniqlo. This is one company that on the price tag, right, they print prices of 6 different currencies. Why? Because at the back end, they already know how much they're going to charge in each different currency. And to ensure that they get that same profit margin and all that, right, they are hedging those currencies in their back room. All right. So first question is this weak yen definitely going to then erode them on a day-to-day basis, their model of operation? The answer is no, not for all these big companies. Now, what about those guys that are still producing in Japan? Well, yes, if you're not clever enough to start some of your factories and all that offshore to benefit from some of all these things, then we definitely would have marked you down the score, right? In terms of, are you a good company? Are you a strong quality company? So that one I will park aside. Those companies probably would not be the ones that we're investing in because they will have margins erosion and all that. But not to forget, there's another group of company that will produce in Japan, but they command a premium. Who are all those guys? Well, again, I mentioned earlier on, if you're a camera fanatic, if Nikon, the reason you buy Nikon, for example, or you buy Canon and all these others, right, is because you want that camera that's made in Japan. If you're a cycling fan on this group today, you know Shimano. Shimano produce gears and all that. Again, Shimano, if you have the made in China and the made in Japan one, which one are you going to buy, right? I'm a bit of a guitarist. I love the brand called Takamine. Takamine has three ranges: made in Japan, made in Korea, and made in China. Obviously, people pay for the made in Japan ones, even though it's a five times premium for versus the one that's made in China. So if you can see where I'm going with this, if you're a gamer, you will buy Sony, you will buy Nintendo because it is made in Japan. So those companies have the ability to transfer whatever weakness in yen and all these others into their pricing. So if tomorrow PlayStation or Sony introduces PlayStation 6. I'm just hypothesizing here. I don't know any insider information. But if they launch PlayStation 6 and they say, sorry, now it's 6,000 ringgit, some of you might faint, but if you want to play game on it, you got to pony up, pay that 6,000 ringgit, right? I mean, you get where I'm coming from. So the reality is some companies, even though they're made in Japan, yes, their cost of raw materials, all that will go up, but yet at the same time, they have that pricing power. You want it? You've got to pay for it, right? So hopefully I've addressed that portion, right? In terms of the BAU, the business, the good companies won't be affected on a day-to-day from their weakness in the yen. Now, to the crux of the question though, will in terms of reporting season, so yes, Japanese companies, we end the year 31st of March. So my new financial year actually just started, right? And you're absolutely right. On the 31st of March, well, it was a Sunday, so let's take Friday, 29th of March. 29th of March, that currency rate was actually the most important because you're right. All the overseas reporting in other currencies report back to a weak yen will inflate that number and essentially make the company look more profitable than it is. So yes, to a certain degree, you will see that. But on a day-to-day basis, right? I mean, when you don't necessarily repatriate income all the time. So frankly, on that one day of reporting, it is a paper gain. I mean, again, just to give you an example, Nico AM, we exist in Asia as a standalone unit. Of course, when the group does consolidated group reporting, they will have to account for our revenue, our earnings in Japanese yen. It might inflate, but they are not physically transferring monies back, because at the end of the day, they need to transfer money back to us again for operations the next day. No, it doesn't make sense. So yes, it might help to inflate, but most investors who are prudent enough, they will understand that and they will not just look at that one day. And in fact, there will be some form of a discounting effect, right? And taken into consideration on a day-to-day basis when you're looking at Japanese equities. And to answer the last part, will there be a capital flight risk? Well, there's some expectation that, oh, if some knee-jerk reaction rather, if earnings not as high as last year, I don't want already, I sell. Sure. But right now, if you recall, most of us are also underrepresented in Japan, right? So when you look from a totality portfolio kind of a basis, right? Japan right now, if you're lucky, as I mentioned earlier, you're probably 6% of your total portfolio. If you're not, you're probably 1 to 2%, right? And if you're loading up on Japan, if you make money, you're taking profit off, great. But in the overall grand scheme of things, you're probably still underweight Japan. And so for most institutional investors and all these others, the panic for them to see the yen weaken and then they pull out their money is actually not there. We don't think so. Yeah. Hopefully that helps. I mean, it's a very, very long answer, but I hope it was comprehensive enough for you all to see the different scenarios which I'm trying to work across. Yeah.
Okay, thank you, Darius. This question should be shorter. There are MIR hedge fund and without. May I know what's the difference between these two?
Okay, so if you buy the hedge share class, what it means is like if Japan goes up 30, you should be roughly about there. You will always be a little bit behind because the hedge, there's a cost to hedging. So what it means is that if in Japanese yen, the performance of the fund is 30%, you will get say 29%, right? You will lose by a bit. But if you don't hedge, then if the Japanese yen goes up and the MYR goes against it, for example, and in today's currency volatility, don't be surprised if you don't hedge it. The fund goes up 30% on a Japanese yen basis. You actually only go up 15%, for example, half of that. So what I would advise right now is for most clients, not to take on that unnecessary hedging risk unless you have a very strong MYR to yen position and view as well, but if not, right, my suggestion will be just to take the head share class and solve your headache and worries about any moving fluctuations of the MYR versus the yen. Yeah.
Thank you. That's a very good answer. And we'll take the last question. Could you highlight from your slide again on the potential growth and period to sustain?
Can I highlight from my slide again the potential growth? Well, I mean, I'm not sure exactly
Mhm.
which slide you want me to go to, but again, if I'm just broadly thinking about the few things I've talked about, right? Domestic consumption, will tourism and all that continue to go upwards again? We do think yes, and tourism, as you can see, right, they've already seen the fruits of the labor from the increase in tourism, the profitability, the domestic consumption. So I don't think that, now they're at 20 to 30 million tourists, right? Suddenly they'll go back in the next 3 to 5 years and say, oh, sorry, we only want 10 million. We're restricting right now, etc. So we think that that's going to be a number that is now the new norm. 30 million is probably what they are gunning for. I mean, to stretch it to 40 million, they would have to do something really spectacular. But I think 30 million is a respectable enough number. That should help, to stabilize consumption on a long-term basis. Companies are getting better. While do we expect 100% of Japanese companies to be profitable enough to pay tax? No, at 75%, is there still room to grow? We would think so. I mean, I think when we see most normal economies, right, especially for developed market, right, you anticipate at least, right, something like 85 to 90% of companies profitable enough to pay taxes, right? Because it's not every other day you get a company that's going bust and all these other things as well. So, I mean, listed companies, I'm not talking about mom and pop shop restaurants and all that close. So when you think about listed companies, right, you do want a higher degree of companies that are listed, being profitable enough to pay tax. And I think with Japan, you will get that potential and that probability as they work towards that. And as a result, right, I mean, this is not like a next year, they reach their limit kind of a thing. I still think it's a multi-year project, at least in the next 3 years, 5 years. Those companies that are stragglers, they will have to play catch up. And the good thing is that with the incentive from governments, right, the whole name and shame thing and all these things I talked about, many Japanese companies are incentivized to actually do better, get better if they are lagging behind to actually catch up at least with their peers and all that. So in terms of time frame, last but not least, one very important thing, in terms of weakness of yen as well, right? As I've mentioned, we don't expect yen to really strengthen over the next 1 to 2 years, really at bare minimum. I mean, from time to time, they might just strengthen for a little bit. Chinese we say 做做戏, okay, just wayang a bit, show, and then we can again back to my point. They are in a very very tough competitive environment. A strong yen doesn't necessarily help them at all versus the Koreans, versus the Taiwan, versus the Chinese people and all that. So they will want to keep the yen weak. So if they don't reverse currencies for at least a year or two, you're really looking at a multi-year project where you can hold Japanese equities, benefit from them, and then of course when other aspects start to turn around, for example, then you explore your optionalities of switching into other asset classes and all. Yeah. So sorry, I'm not sure exactly which slide I was supposed to show, but hopefully that summary helps to bring everything into perspective that if you're looking at this, 1 to 2 years is definitely a safe. 3 to 5 years, I still think you're all right. Yeah. And then of course we can explore opportunities elsewhere then. Yeah.
Okay, thank you, Darius.
Welcome.
Okay, before we end the webinar, I would like to take this opportunity to highlight that recently the AHAM World Series Japan Growth Fund MRH has been added to the EPF approved fund list. Hence, you may also invest using your EPF money via the EPF account online without any sales charge. On the other hand, we are running a promotion for cash investments in AHAM World Series Japan Growth Fund, both MYR and MYRH versions. Enjoy a 0.8% promotional sales charge and receive 10 ringgit bonus units for every 1,000 ringgit invested in this fund. Promo ends 30th April 2024. With this, we have come to the end of today's webinar. If you have further questions, feel free to send us an email at investhelp.my@fundsupermart.com. A replay of today's session will be available right after this on the FSM1 Malaysia Facebook page. Once again, thank you very much, Mr. Darius Foo, for joining us today. And thank
Thank
you
you.
everyone for attending. Good night.
Thank you. Good night. Bye-bye.